Hello, everybody, and good morning, and welcome, of course, as always, to TradeGate Hub's mid-morning market update with, of course, my host, myself, Eliman, Dambell. Ladies and gents, thank you for taking the time to attend this morning's session. Of course, there is quite a lot to get through here today. For those of you who were looking at the markets yesterday, would have seen quite a lot of moves did take place. A lot of the actions in which we did anticipate across the board did essentially come to fruition. So what we are going to be doing this morning is just briefly looking at some of the areas in which we covered yesterday, and of course previewing some of today's potentials, actions as well. Of course, the main area in which we were looking at yesterday, just to quickly go on to the economic calendar, was the inflation data coming out of the US. And of course, what we did see was inflation rise substantially there in the US. And generally, what did essentially happen as a result was we saw a lot of panic from markets across the board. A lot of eyes are now firmly placed toward the Federal Reserve, asking the question of when will interest rates be raised. Of course, earlier on in the month, Janet Yellen was one of the first to potentially anticipate this occurrence taking place, and had already place some questions and put some pressure on the Fed to essentially do more quicker than expected. Of course, the Fed were waiting for inflation to hit that 2% target before increasing rates, but with rates, I believe, from February to March, from March to April, increasing by 0.8 of a percentage. We are seeing that milestone reach ever closer. So what we are going to do, again, starting off with the markets which were most affected, looking at the S&P 500. And guys, what we did see, huge sell-off, absolutely huge sell-off. And if you remember yesterday, when we were looking at the SPX, we did ask the question, what could happen with that RSI? Could it continue to fall towards those levels of being oversold? And of course, what we have seen is yes. And guys, is what I always like to say, when you are looking at the markets from your own perspective, there's two things you need to factor. Firstly, we have no idea what's going to happen next. We have no idea what these fundamentals will hold. And secondly, you need to put yourself in the best position of appreciating and understanding the technical side of things. And by doing so, you can essentially paint that picture in order to potentially guide you to what could happen. And for us, there's absolutely no way we knew what was going to happen from an inflation perspective when we had yesterday's session. But the indications, especially with the moving average, because if you remember yesterday, we were looking at the moving averages and saying, was there that potential for that 10 EMA to potentially cross over downwards? We said yes, just because there was a potential for it to happen. Didn't necessarily mean it would. We had instances before when there was a potential for downwards crossovers, and it just didn't happen. But we saw some signs of that being a possibility. We saw the moving average at the time hadn't yet hit that floor. It was just pretty much in the halfway point. And you can see both of those events have taken place in the last 24 hours. And of course, we have seen the result of this if we were looking at the shorter term time frame. Just absolutely lovely move. It was a great move for all involved. And guys, if you are involved, I think now there's two things to consider. How long do you believe this could continue for? I think now what you will see, because yesterday we did say this as well, typically when we do have these sell-offs, it is seen as somewhat of a discount. We are seeing quite a lot of bulls already wading in the wings. So the question I have for you is, do you believe we are about to see essentially this take place at the, because there's no ifs, ands, buts, or maybes about this, ladies and gents. There is no ifs, ands, buts, or maybes. This does look and is perceived to be a flaw. Not only there at, I don't know, 37, but if you're looking at the 37 level itself on the RSI, currently at 38, we do look like we are already at a flaw. So what will we see? Are we going to see further breaks below, or will we see essentially the markets turn around and take us back towards the ceiling. So very, very interesting one. Looking at the intraday side of things as well, you are seeing that uncertainty start to creep in. So the markets have essentially been moving. I wouldn't even call it a descending triangle. You can see some signs of a descending triangle, but it's probably two descending triangles in one. Actually, no, it just looks like the market's still trying to find its floor with that level there. Yeah, that level there was a descending triangle. It broke out of that level. And of course, now that definitely would not be a descending triangle there. So we had one descending triangle. And from that, we saw another sell off. And now it seems like the markets are still trying to find its floor. And this is the first attempt at what we're seeing in the last hour. Again, this is the futures. So we will see more closer to the US Open and after the US Open. But could this be a flaw? I think that's the question a lot of traders will be asking. If this is a flaw, and will we see the market start to essentially consolidate at this level? So that's the SPX, and a great way to start. But the SPX wasn't the only market affected yesterday. And I know, and I'm aware yesterday that we didn't look at crude oil. So again, guys, we're going to look across the board, and crude oil has to be, it would be an absolute atrocity if we did not look at crude oil here today. And with crude oil, what we are seeing, and guys, what we have seen, and let me put it this way. I remember a year ago, let's actually, this one I want to go back. This one, because this is the first time we're looking at crude oil together on this session, so I somewhat want to go back. And apologies for the for the range of horizontal lines there. You can tell I definitely go overboard with the support and resistance at some points. But guys, a year ago when crude oil was trading pretty much below $10. It was damn near a guarantee. And of course, these sessions aren't here to give you advice. These sessions aren't here to make bold statements. So I do need to, I don't know, watch my tongue and tread with caution. But sometimes, guys, in the markets, there are some things which are called no-brainers. There are some things which are no-brainers. But from the perspective of, at the time, fair, a lot of people were fair. A lot of people were uncertain. A lot of people were seeing things that didn't happen again. A lot of people thought, I don't know, the aliens were about to invade Earth, and essentially we would all be held up by laser beams and told to essentially relocate to a new planet. Everyone was losing their minds when COVID first hit and having different potential outcomes of what could happen. And as a result, it was essentially said crude oil will never be needed again. We saw prices pretty much go to negative. Now, for those of you who remain calm and just did the analysis, there's absolutely no way on earth you believe crude oil will stay below $10. And since then, of course, at the time as well, technically speaking, it was trading, and this is a weekly time frame. So even in the long term, it was extremely oversold, and there was nowhere to go but up. There was absolutely nowhere else to go but up. And we have seen that, and we have seen that, and we have seen that over the last year. But guys, with crude oil, what I have noticed a few years ago, it just trades in ranges, and it was clear it was trying to find that long-term resistance, that pre-pandemic resistance over the last year, and we have clearly seen that has been the case. It's gone all the way back to 67, 64, where it had been trading January, February prior to the pandemic. And guys, that's just essentially what we're seeing now, and I believe we're going to continue to see until we have some more action from OPEC. So moving forward today and yesterday, what we have been seeing again with this range of crude oil, you see now somewhat of a $2 range, 64 to 66 bucks. In a sense, it's probably longer. I believe it's probably 60 to 64, and even going below that 57. So I would say ultimately, and you can see it trade in different ranges, but the big range I'm looking at here on a daily is probably around 57 to 66, 67. So that $10 range is where I see crude oil trading for the majority of this year. But as far as today, what we are seeing, again, this is a daily session. As far as today, we can see yesterday crude oil rose. Of course, some of the tensions happening there in the Middle East, the Gaza Strip. We are seeing quite a lot of blowback as far as uncertainty in all markets as a result. Of course, we also saw the Energy Information Administration, the EIA, yesterday come out and say actually we have more demand than supply. So of course, if the EIA, which typically releases a weekly report, I believe today, stating how many crude oil inventories and things of that nature, if they are telling us we have more demand than supply for the year, of course we know the impacts that would have, and of course we are seeing somewhat the impacts of that statement here today. So it will be up to OPEC to now potentially act. We have seen productions essentially halted for a while. Will we see a rise? Will we see an increase in all productions? Will Russia and the rest of the allies essentially come in to somewhat, I don't know, put us back to where I wouldn't necessarily say where we should be, but at least put us back to where the demand levels currently are. Of course, we know the situation with India as well, and Asia is causing a lot of loss in demand, but we are seeing here in the UK, in the US, in China, demand is starting to, and potentially soon in Europe this summer as well. We know here in Europe, a lot of travel tends to happen. So depending on that situation as well, if we see not lockdowns, but if we see restrictions and quarantine start to ease, that will be, of course, big for air travel across the summer, and that could have impact on oil prices as well. But for today, what I would say is, clearly this is heading for that floor if it hasn't already reached there. It probably hasn't already reached there as well. If you look there, we're currently at 42. This should be around 39. You can see it's getting ever closer. And if it does hit that floor, what next? Could it even hit the floor? We're going to start to see bulls waiting already. The opportunities are there for them. Market and the indications are clear for all to see. So will we see, or is it a bear trap? Are the bears essentially going to pretend like that is the floor, gearing up for a rebound? And instead of going for a rebound, they're met with a sharp elbow at the top, essentially taking them further down towards that 63 level. So it's an interesting one to look at today, of course, especially with those inventories data coming out from the EIA later on. So those are the two main ones. Of course, we didn't look at crude oil yesterday, so I really wanted to look at this. And let's try and look at another instrument that we did not look at yesterday. We did look at GBP USD. We will have to look at cable, but let's try and, again, mix this up a little, guys, on a daily basis. We don't want to be looking at the same instruments on a recurring basis. So let me try and bring out, where is this? Euro USD to start off with instead of cable. Now, if euro dollar, what we are seeing, guys, euro dollar. Euro dollar for me is a bit of a conundrum. It's a bit of a conundrum in the sense, it's a bit of a conundrum because I had some bad losses on this, so it's always a hard pill to swallow looking at this and just seeing some of those earlier profits wiped away. I'm sure for those of you who've had a bad loss in a particular market, every time you open up that chart again, you just have somewhat of a tear and a moment of silence looking at that particular screen. But let me overcome my own grief to potentially create some new grief for you. But euro dollar, again, may just quickly go back to that daily. That was the move. That was the move, which it's just absolutely great move. And to be honest, initially, it was one we saw coming clearly at the time. We did see it essentially getting weak. I didn't see it getting this high. I thought it was going to essentially level out at 118, similar to what it did there in the past. But of course, as we have seen, that momentum of the moving averages just continued to mature through, taking us to this level. And clearly, this level again is a new high. It's a new high. Is a resistance of itself. This is the highest level the markets have been in essentially in 2 months. We've seen this is around 2.5 months. So from the perspective of now, what a lot of people are saying, it's not a coincidence. Yesterday we saw that sell off again. It's really not a coincidence. Clearly, the bears were already waiting in the wings, and of course, after such a rally, such a climb, and you're going to see, I love to use this analogy, but after such a run, such a climb, such a drive, at some point you do need to stop and catch your breath. You do need to pull into the petrol station, fill up your tanks again, and that does take time. And in that time, you're essentially going to see consolidation. You're going to see the formation of a no-fly zone of that support and resistance area, and it looks like 120 to 121.95 could potentially be that for Euro USD. But the RSI, I think the reason I said it was a conundrum earlier on is because the RSI isn't really telling me much, especially how it's currently positioned. You've seen it break above that level there. And that was a resistance in the past. It was a resistance in the past. It was a resistance in the past. And of course, it's a resistance now. Broke out of that, of course, due to the move yesterday. And now the question is, because if you look at that as well, could that be a flaw? Let me just it looks like a very small flaw, but could it be a flaw? And this is why I end up having a million horrors, because I really pay attention to these little details. So could that be a flaw? Could this be a flaw? We've seen, look at that, signs of that being a flaw as well. It's a flaw which I definitely won't be waiting in the wings for. But if you just quickly bring this up as well a bit higher, you have seen areas like there where you saw it hit that floor and rally, hit that floor and rally, and so on and so forth. So, and we have already seen, as I'm talking, guys, just to quickly zoom in, you see that green essentially extending. So is this actually a flaw, and are we going to see a quick essentially what is called as a dead cat bounce, where we see a huge drop followed by an almost instant rally? Are we going to see a dead cat bounce essentially take place here today? For me, and I think this is what and guys, what I would always say for you as well, when you are trading, and again, just on a serious note, when you do have or have had a bad position, what tends to happen is those emotions grow. It's like, I don't know, being involved in a relationship, having a breakup. The next time you encounter that person, encounter your regular, there is going to be some emotion there. It's going to be relatively hard to pretend like nothing had ever happened. There will be some residues of pain, or whatever you want to call it, left there. So when that does happen, sometimes you need to even take a step back. You don't want to make those emotional decisions, because that's how you lose. Of course, the death of all traders is fear and greed. So you always have to try and prepare yourself to avoid that. For me, this is why I'm really approaching this with caution. But generally, let's see, it's not really clean on the daily. For me, from my perspective, again, guys, use your indicators. Try and paint your own pictures using a variety of different tools and techniques. But for me, so far, the stars aren't completely aligning. The stars aren't completely aligning. But here, if you're looking at the 1 hour time frame, in a sense, it is, because you could be saying moving averages positioned, of course, the sell-off has taken place. It looks like We've seen some consolidation. Are we looking at the prospect of that upwards crossover? And if it does, where do we see the bulls? Just quickly add your resistance. And what have you seen above that level there? You've seen a lot of flashes. Of course, we've seen some today already as well, looking like a false breakout. But this is where the RSI comes in, looking at that 45 level. If it's able to really go above 47 and up and up and up, could we see another move? Let's say something even like this. Could that be a move of interest? So these are the little things. Of course, I don't know, instead of a move like that, we'd rather have a move like this. So it's a case of waiting and really seeing and getting confirmation. Guys, what you don't want to do is create a narrative when there isn't any. And I think for this, let's leave this here. Because for me, on my own perspective, it's not entirely clear. And I hope for you, you do have some clarity as far as Euro USD. But I am not seeing a real opportunity for me as of yet. As of yet, the stars aren't really aligning. So until they do, I'm probably gonna stay away from Euro USD. What else? Gold. How can we have gone 20 minutes, 23 minutes, and we still haven't bring up gold? Absolutely atrocity, and apologize. I hope you forgive me for this absurdity, guys. Because yesterday with gold, what we have seen, it was funny. We were at a meeting. And as soon as the move happened with gold, I just remember everyone's reaction, just quickly pointing to their terminals and just looking at what was happening there with gold. And gold is one of those markets, I would say pre-pandemic, it was probably one of the most volatile markets there. Pre-pandemic, we saw a lot of action taking place. And even during the pandemic, it was even worse. But pre-pandemic, when markets were relatively a bit more stable, of course, gold is usually seen as the safe haven asset, as an umbrella against the potential rain coming from other instruments. So typically that does give it a lot of intraday volatility. But that was... let's try and really paint this picture on the shorter term time frame. So this was pretty much yesterday. This was yesterday in gold. Even you can see the last few days. Just look at that drop. This is a 1 hour time frame, guys. A 1 hour time frame. We saw damn near around a $23 drop in 1-2 hours. Then look at these moves there, guys. Another damn near $20 market came up, another 15, and so on and so forth. So yesterday, for anyone who was involved in any of these trades and were involved in the right direction, you're probably in the money. You are probably in the money as a result of this action. But from a technical perspective, what do we see happening today? To be honest, yesterday's moves, in a sense, they were a bit more predictable. They were a bit more, even though it just came out of the blue, it was a bit more predictable. Looking at predictable, I'm creating new words here, but predictable in the sense of we saw where it was as far as the resistance. Even though it broke out, it was still within a resistance from a volume perspective. So that alone would have created the opportunity for a lot of people to look back. And if you look back at that level of that RSI, of that resistance, what you would have seen would probably have been red. You would have seen this. You would have seen this. And just those two candles, and you can keep going back and seeing further red signs, but these engulfing bear patterns there would have absolutely prepared you for a potential sell-off, and that of course coinciding with the RSI there. The moving averages at the time may have convinced you it was upwards, but the other two indications would have probably overwhelmed the moving averages and potentially pointed towards a bear move rather than something bullish. But probably you would not have expected this. And since this has happened, what have we seen? The RSI have tried to find its floor, and it's now trading at a lower, essentially a lower low, and within that lower low, it's setting its new support and resistance zone as well. The moving average crossover, of course, has clearly happened each way. but it does look like it may, let's zoom out there quickly, it may be trying to, oops, oh wow. Oh wow. Okay, so and guys, again, these sessions, as always, and this is going to be the last, I don't know, closing remark for the day, as well as the opening. These sessions, of course, aren't here to give you advice. There is a risk warning for a reason. We do not give advice. We only care to paint a picture and analyze what's going on and put you in a position of being in the loop as far as market occurrences and things of that nature. And of course, from that, you go away, you do your analysis, and you essentially paint your own picture, find your own opportunity, and place your own trade. And for me, what I'm seeing now, and we just talked about it yesterday, as far as the stars somewhat aligning, or the evidence being there that there was going to be somewhat of a sell, even though we didn't know what would be the catalyst. We saw it was relatively overbought there in the RSI, or it was somewhat a resistance. So you already would have been treading with caution. We saw a lot of historical bearish moves take place at that level as well of resistance. If we're looking at where we are literally this second, if you look at this, this was more of a false breakout, but still, that's a lot of bullish. If you're saying the market's hit that floor there and just automatically bounced, that's a lot of buys. And if you look at this candle here, this candle, guys, went from 1816 to 1842 in the space of 1 hour. My math at this stage essentially escapes me. I can't give you the number difference, but generally history is showing us that a lot of people like to buy at this floor. A lot of people like to buy at this floor. And what I'm going to quickly do is just add another indicator. Let me just actually probably not. I like my charts. Let me just quickly bring up another gold chart there. Just bear with me 2 secs. Okay, we're back on. I just quickly want to use the Fibonacci lines on this one. Okay, it's not as clear on this. It's not as clear as this. And so sometimes, I don't know, I do like the Fibonacci, but sometimes I just prefer using just my own levels. But what we're seeing here, and in Fibonacci, that was a 61.8 level. But what we're seeing here, firstly, guys, there's a lot of uncertainty. This is why, and guys, sometimes, and I keep saying sometimes, and I just have to just the majority of times, from what I've noticed, on a personal note, and it is, especially with Bitcoin for me this year, I've pretty much called every trade which I saw was going to happen. But just because you call a trade, guy, doesn't mean you're going to make money. Just because you know the direction of the market doesn't know you will make money from that trade. Sometimes you would lose a considerable amount of money just purely because of timing. So clearly we can see there are bulls waiting here. It wouldn't be a surprise. Again, look at the doji of uncertainty signaling potential reversal as well. When I'm saying it's going to happen, it may not. You could just see this continue to fall. Look at it turning red. But the signs are there that there could be another bounce to potentially happen. Who knows? We'll see tomorrow when we recap this. But from your own perspective, what I would say is tread with caution. Pay attention to each detail. We have seen a lot of uncertainty at this level as well. Look at all of these candlesticks, it's just horrible candlesticks because they're going nowhere, very uncertain as well. So for you trying to repeat history, you do need to be cautious and pay attention to what has happened before. So guys, that's pretty much it for today. It's been an absolutely great session. Apologies again. I don't know, someone needs to send me. I need to be subscribed to some type of porridge, which prevents me from stumbling at the beginning of these sessions. But guys, great session. Thank you again for joining TradeGate Hub and joining the morning update with myself. Of course, we have Dale Pinkert later on, Mike Venetia as well. So do tune into those sessions, and any help or any assistance you will need, of course, log into the chat, and I'm sure you will find traders to help you. So guys, all the best. Take care. See you tomorrow.